Alrighty, Doc here from North America. Good morning, good afternoon, and good evening. Having a little challenging tech situation here today, but here we are. We're going strong, steady, and straight. Let's check the chat line. I see Robin up there. What are you trading today? I agree. At this point, it is fascinating in its own. Oh, there we go. I mean, it's basically things are definitely money. As you know, as Robin and I've been looking at it, we can see that it's gotten quiet in some ways. They're selling the like NVDA as you see it up there, where yesterday they knocked it down, but at the same time, the Russell 2000, they were doing a rotation. The Russell 2000 and the Dow Jones Industrial Average were up, whereas the Nasdaq actually went into a daily sell. But that's nothing major. I mean, it's classic. And now let's see. I guess we had some news out too this morning. So let's see what the news looks like. There's the stock market. Obviously, took a little dip from. Let's see. We'll emphasize it right there and show it to you right here. You see it. The news came out, and the product was trading around 39, where it's at now. They drove it down to about 23. That's the S&P 500. And both the S&P 500 and the NASDAQ, the Tech 100, both went into daily sells, but they're not really, we can go take a look at the daily product of it. Let's go like that. And there it is right there. As you can see, it pushed it into the sell yesterday. Let's put that line in there for those that can't see that as well as I do. And then we go like that. That's where it went into the buy. And so you can see here, it's kind of steady. It's unchanged, really, so the news didn't really do much. You can see the weekly could care less. There's no way that the longer term... Now, if we were to see this starting to break, but look at this, the slow algo on the weekly itself right there, it's not even challenging the manifolds here, the two manifolds here. You can see they're not even challenging it. The fast is just touching it. Not even remotely challenging the zero line whatsoever. Nothing. So this is just, rotation, nothing major. It's not like the world's coming to an end or something like that. Even if Mr. Biden keeps on trying to pretend that the world is coming to an end. He is a strange duck, that's for sure. That is for sure. So. That's that. Let's go show you the Tech 100 right there. Let's see. Let's add a couple signals in there. There's the buy. There's the sell. And, it's been in the weekly buy since back in here. Right there. And that's it. That's the magic of it all. So. What else we got to say about this? I was out working on the electric fence for the vegetables, and I was thinking about it, and it's amazing, we Robin and I talk, and other professionals talk. We talk shorthand a lot of times. In other words, we don't. I'm not very. Sometimes I'm not as explanatory as I should be, or explaining, or speaking clearly, especially with a global audience. And I was thinking to myself, what a circus act this whole market is at the moment. There's they don't know to come or go. But one thing is for sure, they do not want to sell the market. There are times where they don't buy the market. That's what it comes down to. That's why our weeklies are so strong. And rotation. I don't once in a while when I'm going through, I'm giving a rush push through. No one's stopping asking me anything. I'm just rambling. And the more that I talk, it seems like I need to have more of a conversation with you. Because I'm just talking like I'm talking to a professional, and sometimes I leave out words that would help you to understand really what the markets are going to do, and more than likely what they are doing compared to just saying, oh, see that, we're in a buy, it's up, and then go on from there. And so, we're not really seeing any heavy selling when it comes to the overall marketplace. The weeklies are staying in the weeklies. You can see it even here with the Tech 100. Let's see. Let's put the Dow Jones Industrial Average. Let's see. Where do I go there? I go to open up a workspace because I like the one I use on the weekends with the fast. That's my favorite. I'm going to make a copy of it and send it to the other screen so when we look at it, you see here it's went into the buy right there, and you can see the fast went into the buy right there, and it's climbing. It's been in the daily buy. It's up, right now. That's today live, and it went up yesterday, whereas the other products went down. But also at the, let me copy this, copy window. Now I'm going to close the window, close workspace, yes, and then go back over to here and paste it in there. So you can see there, it's the Dow Jones Industrial Average. There's the all-time high. It's working its way back. It's had a really nice correction. This is the new contract, and you can see here we didn't get into the sell until, well, the fast went into the sell up in here. You see it right there, breaking down. But we don't have much back data. I mean, it's collecting. It won't show this until 50. It has 50 days in it that you're not seeing. So the math is calculating 50 days back and then starting here showing it. It doesn't show it for 50 days. It's a safeguard I have. So in other words, it probably went into a buy somewhere there, and that's the way that rolls. Now let's go and take a look at what I was talking about yesterday. Obviously this is up yesterday, and so is the right there. You can see the action. They gapped that thing. I mean, they just gapped it. And they ran that yesterday, and I believe that's today. They're doing it again today. They're putting strength into it. Yes, that's today, live. So it's been in a buy for 3 days. It went into the buy right there, launched itself up. You can see the fast has been in a weekly buy since back in here, right there. You see that. And the slow took a little bit longer to get through the manifold, get through the zero line. But you can see here it started to turn here and started to make a very firm, very consistent, solid run. All right. And so I think I want to work at having a much more conversation with you instead of me just going, oh, look at that, there it is, and go on to the next thing. And that's much more important as far as I can tell. And because I don't get a lot of, I mean, once in a while, like Janos will jump in and say, let's see, one of the farmers just texted me and said they're like 30 kilometers from here, so that's like 21 miles, and they said they're getting clobbered with rain, and I was just out there working, and we're getting nothing here. So, yes, I'm going to work more at this general conversation, and, go slower and not race to try to get every damn chart in without having a clean conversation about it. It just seems much more important to do as far as I can tell. Now, if someone says, hey, you're moving too slow, show me this, I'd gladly stop and do that. I think that's what it really comes down to in the end. That's exactly what it comes down to. So where are we at this point? So we're looking at, right now, we're really looking at the indices. And, the indices are, they're really showing us that there's no real selling going on in the sense of like, oh my God, we got to get out. This is horrible. The world's coming to an end, that type of thing. We're not seeing any of that. Not at all. Let me take a sip of water. Nothing better than fresh water. All right. From here, we're showing you very clearly, as much as we see selling in some of the stocks, especially the techs. Let's go back over to the beta. There's the beta. Put it up on there. And that's yesterday with Nevada, NVDA. And it seems like the AI stocks or the hot stocks or this Magnificent Seven, which is pretty much a bulk. Let's put it this way: out of the 500 companies in the S&P 500, 493 of them are up the same amount as the 7 are. So in other words, they're carrying that index. Those 7 are making that index literally fly, you know. Not counting the Tech 100. There's 100 stocks in that, and those 7 are in the Tech 100, I would believe. Nevada. Let's see, is there anybody that's not? Google's in there. Amazon's in there. Tesla's in there. Microsoft is in there. Intel is in there. Maybe AMD, but that's not part of the Magnificent Seven. What else is in the Magnificent Seven? Let me think. Apple. Let's see, I think I got them all in there. So, you know, the Tech 100 is up double what the S&P 500 is. Yeah. And so that's there. Now let's go take a look at, say, Apple. I think Apple was still in a daily buy yesterday. But you see Nevada is pushing into the sell there. Well, I think I've made my point. If anybody feels like I haven't made my point, just put something up there to make me explain myself a little bit better. Okay. Now let's jump over to the currencies. Let's go take a look at the dollar index. Dollar index was actually finally flirting with a weekly sell. It's like, hooray. There it is right there. Today's Friday. It looks like, you can see. Oh, you can't see. Right there. And so you can see now, that it's down just a little bit from yesterday, but nothing major. And at the same time, the weekly finally is pushing into the weekly side of the sell, which is like, all right, finally they're starting to back it off a little bit. We think the dollar is overbought. It's been very firm. I think, more than anything else is, well, yesterday, what Mr. Powell said over the last couple of days took the interest rates and definitely shifted them. And so let's show you the 30-year bond. Let's see, right there. There's the 30-year bond. They gapped it up, and now they're putting some pressure. Now, that doesn't look right. Let's see if we can fix that. Do default. There we go. That still doesn't make a lot of sense. I'm going to double check that, but I don't think it was down. And that is yesterday. Let me just go take a look at it on. Oh, we'll just put it up over there so you can see what I'm looking at. I'm going to go see what the exchange put up there. And we'll show it to you. $30-year Treasury bond. Right there. Right there. Yeah, see, that doesn't make any sense. And there it is right there. You see that? That was the day. That was the Powell was speaking 2 days back. What, Tuesday and Wednesday? And so they drove it up strong. It was up with Powell the second day, but the third day, yesterday, they really roared it. Now today they're moving it back down a little bit, but let's see if we can get this to update over here. Let's change the data feed. Oh, good. Change the data feed. Let's see. CBOT. Electronic market. There we are. And that needs to be fixed to begin with. I'm going to fix that thing because I want to see the bond with our math. CBOT. ZB. September contract. All right, I can fix that. That's good. So let's see what this one should be. That one opened at 118.7. That was the 11th. Seven. There we are. And where did it settle? It settled at 19.8. Okay, that's close enough. Let's just say okay. Let's see if we can do it this way, like that. It's saved. Close. Now we'll adjust that. And this will make a lot more sense. There we go. And so now you'll see this. This is the 30-year Treasury bond, and that makes more sense. And you can see here, you know, it pretty much battling in the buy from there. And the weekly buy doesn't seem to, you know, remember traders, when the bond is going up in price, that's what this is price, not yield, price. Yield is how much it pays. Price is what you pay for it so you can own it, like buying a stock and a dividend. The yield is the dividend. The price is the product. And so it's been in a weekly buy since the 115.20 area. And now we've gotten to the basically to the 120.10 area. So it's had a wonderful move on the upside. And every time it goes up, it means that the price, the interest rates are dropping. Bond price goes up and the bond interest rate is dropping. Okay? When it goes down like it did here, it means that the interest rate is rising. Okay. And so you can see here it's been on a nice little tear on the upside there. All right. So that is the magic of the bonds. And when the fundamentals do... Let me kill the volume. There we go. So the way the markets have been moving, and that is that the way the markets do move is that they follow a lot of fundamentals like interest rates, inflation, growth in the country that you're talking about, GDP. Why do you think that the Turkish lira is trading at 30, like 35 or 36, when Prime Minister, now President Erdogan, took over running basically the economy there? It was trading at 1. Then it went to 2. And then it went to 4. And then went to 8. And we've seen what it feels like for Tokyo. They went from basically 0.80 up to 1. And now they've traded high as 1.6. Where Turkey has gone from 1 to 36. So obviously, that means that interest rates are through the roof in Turkey. Inflation is through the roof. And what's that tell us? Obviously, they're not growing. If they were growing, the currency wouldn't be doing it. That's what currencies tell us. Now, some can say, "Oh, you're, anti-Turkey." I'm not anti-Turkey. I'm just anti-bad. Let's put it this way: I am anti. I'm anti. How do I say this politely, like a hedge fund manager would? I'm against bad economics. I think that's the best way to describe it. I'm not comfortable with bad economics. And that's what we see. We're seeing just through the currency. Got nothing for me to know or what he's doing. But right now I can tell you that poor currency is getting its head kicked in. Mm. And that is the name of the game. Now, let's jump over to, now that we've looked at the dollar index and we've looked at the fundamental to the dollar index, and that is interest rates. In other words, the Bureau of Labor Statistics or different economists can tell you different things about the economics, but one thing is for sure, in a live free market, open market, bid and offer, the markets tell us a lot more than what the economists are telling us. That's why none of these economists are any good when it comes to trading. They are usually, wrong, which is really odd. Now, not many industry groups you can be wrong like 9 out of 10 years and get a raise in your income. It says a lot. I'm drinking water here. It says an awful lot. It's a strange world. Where they don't respect proof, physical proof, instead of just puntuf type stuff. Where this is overvalued or this is undervalued. Well, how do you know? That's why they don't own their own funds. That's why they're not traders. And so instead they pontificate. My 2 sons have economic degrees. And I told them, if you want to look smart, get an economic degree. You don't have to be accurate. You just have to sound smart. And so that you can see right here, that is the dollar index, and it's been working its way down. You can see the fast has been breaking. Broke the 0 line right there. And you can see the dollar index. When we go back to the dollar index, you can see it works in the reverse. That's the dollar index. And then when we go back to the bond, it goes the opposite way. It's physical, real proof. So, from there, let's go take a look at the currencies. Let's take a look at the euro and see what the euro is up to today. That's unfortunately, that is the great experiment, as I always like to say. We'll come back to that since I already mentioned its name once. But here's the euro. The euro is gaining against the dollar, coming and challenging these highs here. And that's why we see the dollar index dropping, and you see this rising. And so that's the... and you can see it's going into the weekly buy, too, at the same time there. Right there. Weekly buy. Then. Let's go to the British pound. The pound, we've been saying, has been outperforming. When we go and look at the euro GBP, you can see it's been breaking down. And it's been in a sell from up in here. So the pound has shown... a little weakness, but nothing major. It's been very strong. It's come down from the, the 86 area down to the 83.90 area. It's pushing down pretty well. So as much as you could try to say, oh, well, the euro is so strong, you could blame it, say, oh, that's why the great experiment is looking so bad. No, not really. They have their own piccadillys, as we would say. And we can talk like a hedge fund manager and be very polite. Try to make it so that you barely understand anything I'm saying because it sounds so nice and it's so sweet and candy-like. And so that is the cable. Look at that. Jumping up, jumping, be gone, up. It's been in a weekly buy since last week, so it's catching this whole move. It's been in a daily buy since right there. Not bad. Not bad at all, man. All right. So now from there, we jump over to the great inflation fighters. And look at that. Not looking like the great experiment, is it? No, it's not. Being pretty responsible, gaining against the dollar. Even with them lowering interest rates twice now over the last 6 months. Not bad, huh? Not bad at all. We really do respect the Swiss and their abilities. You could say almost anything, really, or not. No, let me say this. You could almost say, in many ways, almost anything about the way the U.S. government treats Switzerland that makes them have problems. As if this government knows right from wrong. So far, I have not seen anything that says that this government, under the new president for the last 3.5 years, knows anything about right or wrong. There you go. Okay. So there's the Swissy. And then right there, we'll go to the poor yen, which had a great break yesterday. And that is all because of the interest rates. Again, as we saw the interest rates, let's remind you, traders. Right there. See that big pop up? And you see right there the effect that interest rates have. And what affects interest rates? Inflation. Now, they don't pay attention to, Mr. Biden's Bureau of Labor Statistics. They kind of ignore it because they can see, they like rubber meets the road. They don't like to throw money away. Bond traders are very, very tenacious, and they are not fast to throw money away. So that's why they call them bond vigilantes. All right. So from there, where we go from there? From there, we'll jump over to, we'll look at the Great Experiment. Because that's the only way to describe what former Prime Minister Aragon is doing with his country. It's one giant experiment. All right, as you can see right there, it's broken the box. I was cheering for it to stay inside the box. I feel sorry for the Turkish economy. I feel its pain. And you can see here it's been in the buy since the bottom of that box. And unfortunately, it's gone from the 34.5 to the 36. Now, when you really want to look at, what a half responsible. I'm not the biggest fan of the Japanese economy. There's no doubt that a lot of traders, especially in the hedge fund universe, like to refer to it as the $20 trillion pairs trade. Or I'm sorry, carry trade. The $20 trillion carry trade. They use their currency to borrow money. But, you can see here, they gone from 1.56 to 1.62. And that's a whole different, it's a whole different gig. It's 162 yen from 152 yen. And so that's nowhere near the advancement that we see over in the Great Experiment. Where we see, when we see 12 points moving that, you're talking about a 33% increase. Whereas when you see it go from 152 to 162, you're talking about a little more than a 6% move, not a 33% move. Yeah, let me repeat that. A 33% move in the in that product, the Turkish lira. So it's very painful for the economy there. All right, that pretty much leaves us looking at the South African rand. They keep on moving it down. We're pretty happy about that. They seem to have calmed somewhat down in their politics. We're very happy about that. The anti-illegal No, wait a minute. I have a better name for it. I'll get it out of this mouth so that everybody should be able to understand it. They don't like illegal aliens. I'll say that one more time. The new government is very supportive of only legal aliens, not illegal aliens. Apartheid was part of the structure that accepted illegal aliens. And that's what the difference is. So we're starting to see some firming of the currency. And with that firming of the currency, we see firming of the metals contracts. That's how that usually works. They buy metals, when the currency is gaining against the dollar. All right, now let's show you gold. There's gold, backing off a little bit from yesterday's excitement, the big drop in interest rates. It's still in the buy, been rolling up, and it's in the weekly buy for a second week. Silverado, right there, same situation. It lifted up, but you notice they're taking a bigger profit today in the silver itself, which is a tad surprising. I guess that's the hedge. Traders that are long gold are selling some silver. That's, it must be the hedge. And unfortunately, they do the same thing in platinum, which I think is incredibly dangerous. It's one of the, I always say platinum is the most dangerous short in the world. Now, yesterday they pushed it into a buy. Today they're driving it right back again into the sell. The weekly is right on the edge of a weekly buy. Look at it. Matter of fact, right now it's at just 0.036, and the fast has dropped underneath, and you can see it at minus 4.27. So, it's not the metals. We're so excited yesterday, like, hey, look at the bond. This is wonderful. Interest rates are dropping. Mr. Powell realizes that bonds are transitory. We keep on trying to emphasize that fact. Bonds are transitory. Interest rates are transitory, but inflation is not. Why they ever even declared that for a year and a half, I have no idea. Which gives me no faith whatsoever in the decision-making process of the Federal Reserve. Probably the funniest thing of all, and one of the most absurd things of all at the same time, is that they've been saying now since November of last year they're going to lower rates. Here we are in July, heading for August, and they have not dropped 1 point, not 1/4 point. And so it tells you the bond vigilantes are not willing to put up with the smiley faces that the Federal Reserve keeps on putting out there. It's the bond traders are not willing to accept the points of view of the Federal Reserve. And that's just a fact of life. And so as you see right there with the platinum, which is now trying to drive itself right back into a sell, and at the same time, the weekly looked like it was going to climb into that weekly with no problem. It was through the manifold. It's so rare, incredibly rare. It's like 99 to 1 when a weekly line like that goes through the manifold. Usually it stays in a weekly buy. But look at the damage they're putting into the platinum right now. Let's take a sip of water again. All right. So from there we march over to the energy sector. Right there. You see oil's turned back up. It's in a buy. Actually, it's showing it's in a buy for the last 3 days. Let's double check that. I'm a little confused there. Yeah, that's not right. Let's fix that. It's still not right. It's flirting with the buy today, but these two things are wrong. Let's fix that. Because people are watching this webinar thinking, all right, Doc, show us the money. Show me the money. Let's see, crude oil, NYMEX. Augie doggies. There we go. So, what do we have here? Let's go look at that. So the first one is, I see, first one really is the 9th, 82.22. 82.22. $82.22. There we are. Let's light that up right there and move that over so I can see it better. And so 82.22 on the 9th, and it's settled at 81.41. And let's fix that. 81.41. Then the 10th was 81.81. 81.81. Cool. And then let's see where that is. That sounds right. And what was the settlement? The settlement was 82.10. So it's off by about the highs being fixed. Oop. Let's go like that again. Let's see, we just double check it one more time. 82.10. There we go, like that. All right, now that fit that. That fixed it. Now let's go one more. Let's fix the 11th, and then we'll be fine. All right, and what was the settlement? Let's just double check it. 62. $82.62. There we are. All right, now let's see how it looks. And this will make more sense to you because it's just fighting its way into the daily buy today. That's better. That's what we know. That's the story. No, it wasn't there. I guess it went into the cell there. Yeah, went into the cell there. And then it went into the cell there. There we go. No, not there. It stays right where it was before, right there. And now we're flirting with the daily buy as we speak. That's better. All right. And that makes that fixed, so at least anybody out there trading oil is seeing the accuracy. Let's see, save file. I'm going to save that one because it's so nice. There we go. All right. Now, traders, from the crude, we'll check and see what Brent is doing. We're adjusting our beta, so we're not able to show you it yet today. I can tell you where it's trading, and that's what we will do. Let's see now. I guess it'd be like right there. Now let's get rid of that. Let's open that. Let's see. Minimize that, and here it comes. And let's show you. And Brent there's Brent, and Brent is doing the same thing as this is like the intraday. Let's go, and you can see it's up 50 cents like the way West Texas Intermediate is. They're both showing some strength there. They're doing some buying. Buy, buy, buy. And in a weekly sell. I'm sorry, weekly buy. Daily buy, weekly buy. As much as, I believe Mr. Trump is going to win the election, I am surprised that they're taking the oil up. That does surprise me enormously. But we follow the math here. We can't be like an economist and come out pontificate about ideas that are not going to happen, but could happen. Let's take a look at natural gas. Oh, also, let's look at the heating oil. There's the heating oil. It's doing the same thing as crude. It's trying to lift up there. It's trying. And just barely getting there. The weekly is actually starting to threaten, which is, yesterday we looked at the contangos and in natural gas. Why don't we take a quick look and see what the contango looks like in heating oil? This is the fuel that they put in the trucks and diesel trucks and the airplanes, the jet planes, and the heating systems in homes. All right, let's go to it. And there is heating oil. And you can see that August is at 253, Sep's at 255, Oct 256, November 256. Only a penny difference, really. That's it. All the way out to February. So they're not anticipating a big move on the upside for this winter. Now, when we looked at natural gas, they were moving up 30 cents at a time, which was very impressive. 20 and 30 cents. So over the same time period yesterday. Matter of fact, let's put the Jojo the monkeys up on the screen again. And then let's put natural gas on the screen. Right there. So you can see here, it's been selling down, and we're seeing we're not seeing the weakness in the underlying crude contracts themselves compared to natural gas. Natural gas, look at that, it's been sliding down from 310. It's almost down a full $1 now. Where was it on that pop right there? That was at $3.21. Right now we're trading at $3.26, basically 27 cents. So it's 93-cent difference. And that's the magic of it all. The Augie Doggies of natural gas. Now from there, we're going to jump over to, let's go to, I should go look up that energy company down in Spain. I meant to look that up. We'll figure that out for Monday. Monday I'll be able to show it to you possibly. All right, so that is the energy sector. Now from there, where do we go? We've done the energies. We've done the metals complex, which is feeling some pain, and I would imagine the stock market today is probably firmer again. Right there, yeah. See, it's right where it is. Is it unchanged for today? Let's see. What is that? It's up $2 for today. So the selling that happened yesterday, not having much of an effect. It did push it into the daily sell, but it's in a weekly buy, so you don't have much room there. You see it's rolled over again. It's been in a sell now since the 46 area. We're at the 40-42 area now. Went into the sell right there at 46. And now we've gotten down to 41.50 low, and we're at 42.50 now. And that, that's where it went into the sell right there. Right there. All right. What else we got? I guess that's about it. So, I guess we have to come up with a name for this particular webinar. And I was thinking about that when I was working out in the field today. Like, the name, I try to make a title of the webinar something pretty clear. In other words, not distorted, but, in fact of what we were saying. So in this case here, I was thinking about one because of the interest rates. I was thinking about the way the interest rates had popped yesterday. And we could say something like today in the title, something about interest rates, which are still higher than they were 2 days ago. I mean, the price of the bond, the interest rates are lower. Bond rates tell us what the real market is, or something of that nature. That's what I was thinking because of the way they popped and the way the currency pairs popped. So bond rates show the way. I think that's what it comes down to, because I was really impressed with the buying in the Russel 2000. I mean, that is an enormously speculative index, and it's been ripping the last couple of days. 3 days in a buy now. Let's just put it up on the screen again. Right there. Let's do that again. So I would say that the title today would be let's see. Interest rates and Russell lead. I think that's what it comes down to. I mean, I really do. I see that as something important, because when you see that, that's a lot of money managers automatically assume when they see action like that they can commit more capital to their portfolio, and that's really that's what generates a lot of buying. When the money comes off the sidelines and gets involved. So I think that's going to be the title today. Now, traders, we're on Friday. This is TGIF. Thank goodness it's Friday, So we're heading for the weekend, and like to see that everybody have a safe and smart weekend. If you have any queries as you're watching this webinar on recorded, you can always ask a question, and we can always respond later on. I mean, we can read when we see it. So it's a smart thing to do, to ask the questions you would like if you are just one of those which we have a couple hundred that like to watch the webinars themselves during the repeat. So we're going to say interest rates Russell lead market. Here we go. So that's going to be our title today, and why. Again, I'm going to remind you, and I'm not going to just run away by leaving it at that. Russell is the most speculative of the four major indexes we have, and I think this S&P 600 is something like that, but they trust the S&P 600 a lot better than they do the Russell. So when you see the Russell launching itself the way it has, it tells us that there's definitely more buyers out there trying to come off the sidelines and get into the market. Now, yesterday and the day before, it has had that feel like they're not buying, as aggressively. But what it really comes down to is that it was more of a rotation since they were up and the Magnificent Seven were down. So that's kind of about it. And the Dow Jones Industrial was up yesterday. So the S&P 500 and the Nasdaq tech stock, or the Nasdaq 100, was the weakness, and that's the rotation, selling them and buying the others. All right, traders, we are out of here. This is Doc from North America saying happy trails to you until we meet again, which will be Monday, TGIM. Happy trails to you, to all our trading friends. Later, Dukascopy traders. We will see you on Monday morning. Ta-ta for now.